There's a new global resource battle brewing. It's a kind of technological Cold War between the United States and China. And right at the heart of it, these things called rare earth minerals. They're the essential building blocks for pretty much all modern technology. And guess who's right in the middle of it all? The vast, mineral-rich outback of Australia. And look, let's just dive right in with a pretty stark warning. When a guy like Jamie Dimon, the head of the largest bank in America, says something is painfully clear, you can bet that Wall Street and Washington are paying very close attention. This isn't just about rocks and mines, folks. This is about massive economic vulnerability and national security. It really sets the stage for the urgency we're about to unpack. And that really brings us to the big question for our analysis today. There is a fire hose of capital being aimed directly at Australian mining projects. So what we're going to do is break down the facts and figure out if this is a chance to get in on the ground floor of a huge geopolitical shift, or if it's a bubble that's just waiting to pop. To really get a handle on the opportunity in Australia, you first have to understand the sheer scale of the strategic hole the Western world has dug for itself. Honestly, this is the foundation for the entire investment thesis we're exploring. Now this chart, this really reveals the true nature of the problem. See, it's not just about who mines the minerals. The real issue is who can process them. And as you can see, China has a virtual monopoly, controlling something like 85% of global processing. This is the critical choke point for everything from the magnets in F-35 fighter jets all the way to the components inside your smartphone. And this just brilliantly illustrates the economic threat. The U.S. Geological Survey has mapped it all out for us. You see that top right corner? That's the danger zone. That's where a high risk of supply disruption meets a massive potential impact on the U.S. economy. And look what's sitting right there. Rare earths. A supply cut here isn't some minor inconvenience. We're talking a multi-billion-dollar hit to GDP. So this clear and present danger has triggered an equally massive response. And that leads us to our next section, the incredible financial and political alliance being forged between the U.S. and Australia to essentially build an entirely new supply chain from scratch. First up, you've got the seed money. The Australian government is kicking things off with a nearly $800 million strategic minerals fund. This is all about directly investing in local projects to get them off the ground, de-risking those really difficult initial stages. And then the United States jumps into the game with a massive $3 billion joint venture. This is a project to develop critical minerals directly between the two countries. I mean, this is governments putting serious money where their mouths are, and it signals a real long-term commitment. And it doesn't even stop there. Private capital is just flooding in. JP Morgan has announced a staggering $1.5 trillion security initiative that specifically targets critical minerals. The scale of the money flowing into this space, it's almost hard to comprehend. So how exactly is the U.S. government deploying all this capital? Well, it's a pretty smart three-pronged strategy. First, they're offering direct equity stakes, basically becoming co-owners. Second, they're providing government-backed loans, which lowers the risk. And third, and this is crucial, they're signing off-take agreements. That just means they're prepaying for future supply to build up their defense stockpiles. This guarantees a buyer for these new mines before they've even started producing a single ounce. But, it's never that easy, is it? The promises are huge, but so are the pitfalls. So let's move on and take a hard look at the serious operational risks that could completely derail this entire investment thesis. And to see these challenges up close, we really only need to look at the flagship project for this entire alliance, Lynas Rare Earths. Now, they're the world's largest producer outside of China, and they're building a brand new processing plant right in Texas, using Australian minerals. It is the perfect test case. So here's the crucial point. Building these advanced facilities in the West is incredibly difficult and expensive. The Lynas Texas project was originally budgeted at $400 million. Well, the current projection has ballooned to $575 million. That's a 44% cost overrun before they've even poured the final foundation. And this table tells us exactly where all that money is going. Radiation controls for naturally occurring radioactive byproducts are up 89%. Water infrastructure up 71%. I mean, these aren't minor miscalculations. They reveal the immense technical and environmental compliance challenges of building this kind of industry outside of China, where, let's be honest, those concerns have historically been overlooked. And the headwinds just don't stop there. There's a potential policy paradox where U.S. tariffs could end up hitting materials from its own allies. there's significant timeline risk, with many key Australian mines not even expected to come online until 2026 or 2027 at the earliest. And as we just saw, the technical hurdles are absolutely immense. So that's the battlefield. On one side, you've got this geopolitical imperative backed by literally trillions of dollars. On the other, you have massive execution risk and spiraling costs. This brings us to the final and most important question. What's the verdict for an investor? After weighing all the evidence from our source materials, looking at both sides of the argument, our analysis leads to a clear and definitive investment recommendation for the entire sector.
So here's the bottom line. Despite the very real risks we just talked about, the strategic momentum here is just too powerful to bet against. First, the geopolitical tailwinds are unstoppable. This is now a matter of national security for the entire Western world. Second, the financial firepower is overwhelming. The public and private funds are already committed. And third, the demand is locked in for decades to come, from defense, electric vehicles, and every high-tech sector you can imagine.
However, no investment thesis is bulletproof. There is one major event, one single biggest risk that could derail this whole bull case. A significant and lasting detent, a relaxation of tensions between the US and China. If some major trade deal gets reached, the urgency that's driving this entire strategy could just evaporate overnight, and that would likely cause a sharp, short-term retraction in the sector. And this all leaves us with a final thought. As geopolitics and markets become more entangled than ever before, maybe the ultimate bet here isn't on a single company's balance sheet, but on the enduring strength of an alliance. And in this new resource race, well, that might just be the most valuable position of all.